Good day, everyone. How are you doing today, guys? It's very nice having you all on this stream, live stream, one more time here on our YouTube channel. The markets are super active today. Do you guys trading anything so far? Are you into any trades? So all the markets gapped at the open today. Primarily due to the US dollar strength. I'm holding here some position on gold, on Nasdaq, so I'm going to just close everything here now. So we are ready to start. Let's start with the euro today. On the daily chart, the price tried to break below this low here. It failed. On the 4-hour, retracing, filling up this gap here. And on the 5-minute chart, on the 5-minute chart here, we saw how the price formed this inverse head and shoulder pattern, and now is filling up all this gap. Also, Nasdaq filled up this gap here, came somewhere in the middle. I don't know if you can see, came somewhere in the middle. And the market is favoring the US dollar. Yeah, we had a great trade. Now, just bear with me, guys, to rearrange my windows here. Alrighty. What do you think is going to happen with the euro? I believe we still have some room to move to the upside on the 5-minute chart. So if this inverse head and shoulder plays out well, the price has all the potential to move for easy another 20 pips during this session. There are a couple of zones here. First one, of course, when we confirm the swing high, we will see where this low volume node or fair value gap comes in. First, we need to confirm the reversal here before we draw the Fibonacci. Sterling, same to the upside. Australian dollar is green. It means that Australian dollar is the strongest among the currencies here. Nasdaq. By the way, guys, look at the oil. Look at the oil, how much it went up today. Crazy, crazy, super crazy. Crazy move. From the open up to here, it moved 28% today. 28% within a day. From $90 per barrel, it skyrocketed to $119 per barrel. And of course, it offers great opportunities. Since the market is retracing back to fill up this low volume node. Guys, one of the best things about the market is that we can combine candlesticks with volume analysis, and that's a spot on, okay? If you are a beginner trader, let's keep things simple. Just pure candlesticks for now are more than enough. You can get so many opportunities, so many opportunities by learning how to trade the candlesticks. And I have a full course that is about candlesticks, and if you trend candlesticks, Fibonacci, retracements, reversals, everything. So if you are a beginner, it's extremely suitable for you. Nasdaq came up to fill a part of this gap. As we see, it went right here in the middle. Now it's selling off. Of course, is driven by the downtrend, failure to surpass or to break above this high. And I think I want to get involved with this one. And of course, I'm trading on my prop account. I have a couple of funded accounts, and also I passed another challenge on Friday, and now I'm about to, I think I'm going to request a payout here from this account. The balance is, that's a 200k funded account, so 6,664.90 cents. Okay, we're not going to request the 90 cents, just 6660. Okay, so maybe I will trade on another account now. Just bear with me. So I get ready here. Okay. So with Nasdaq, we have the opportunity to target this area, and if price makes it down here and closes below here, we're gonna be all the way to these lows, this one and that one there. So there is a lot of room for this one if it moves down, but I have my opportunities open to go long on Nasdaq too and fill up all this gap here. As I said, it only retraced until the middle. We still have another 140 pips, and maybe the market will honor that today. Anyhow, guys, this gap, it will get filled. If not today, if not tomorrow, the day after, it will get filled. The way the way the market moves is based on when they leave these gaps. They're gonna go back to fill up the gaps, and in the leveraged markets like the CFDs market or the future markets we trade, 100% of the times, the weekend, the Monday gaps always get filled, always. In the stock market, maybe not. Maybe they don't get filled that fast, that aggressive, but in these markets, absolutely yes. I'm trading the markets for more than a decade now. I see the same things over and over and over again. German 40, I got some great trades in the morning, although very aggressive, because I was selling the top here right at the London Open right there. I got a couple of positions, but when I saw the price didn't move and only left these dodgy candlesticks here, I got out of the positions. And let me share this with you guys. The reason I'm a huge fan of trading price action, raw price action, is because you can understand the dynamics in the market. And let me make it clear with my friends, I know people, they trade exceptionally well also without candlesticks by using volume analysis, heat map and all this stuff. I tried everything and I found success with many of these, okay? But let me tell you something, it's not just one way of trading the market to become successful. It's what can you do consistently, and you need to have an approach that works for you most of the times. If you are a beginner trader and you can take anywhere between, I'll write down some numbers, between 55% win ratio, and when you have winners you make 2-1 or 3-1, it's great, it's phenomenal. You don't need too much and more to become successful in the markets. Think about that. It's all about probabilities, okay? Everything is about probabilities in the market. Once you stick with the method and later on, if you can improve a little bit your entries, you add something, let's say Fibonacci cluster, and you combine something in your trading and you get better quality trades, guess what? You can make, let's say, better calls, and you can increase your win ratio, let's say from 55 to 60% or 65%. And trust me, it's more than enough to be consistent and make good profits in the markets. Okay, guys, it's good to be aggressive. We want to be aggressive traders. We want to get as much as possible from the moves, and it's nothing wrong with that. But if you always try to run behind every new idea or something that, this is missing from my trading, then you will just spin that hamster wheel without ending. No structure, confusion, analysis paralysis, and just burning prop account after prop account after prop account, or your trading account. Is that fair enough? There is a nice price action pattern. It's forming now on the minute chart on Nasdaq. Look at this. Price action, trading candlesticks, black, green, black, bearish engulfing. It's right at support, so it becomes a little bit, let's say, dangerous to trade the support. But see the candlestick. The buyers tried to push the price up. Sellers now trying to push the price down, okay, but they didn't close bearish, so we didn't see the close below this low, so the candlestick didn't formed as it was showing before the minute. Right now the market is at support. It's sitting here at a key level of support. See on the 5-minute chart how strong is this support. Also, the price stayed within this range. It's been what, since the London session. See now how the market can easily move into a new move to the downside. If this is going to end up as a distribution phase, then we will expect the price to move down. If not, we're going to see the price again back to this high, and from there, just same process. Euro, I'm still bullish on Euro for this session. Gold was a bit sideways this morning. I didn't really like the price action on gold because it's just sideways. Now a bearish engulfing formed. The market last Friday sold off, broke structure here, made a lower low. It retraced back around 61.8% or more. Yeah, here 61. That happened during the European session and one more time in the London. And since then, the price is getting rejected. Let's see how it's going to end up today. If sellers remain strong, we will see the price all the way down here. This price action now, this candlestick, is a bearish engulfing, strong reversal pattern, and appears usually when sellers are in very much control of the situation. On the Euro US dollar, to be honest, I'm still bullish, guys, because I believe that the market needs to fill up this gap here. We are trading against the 4-hour daily downtrend. This is what is happening right now. But if we're gonna trade this impulsive move to the upside, we can wait on a lower time frame for the retracement. Maybe that was the retracement here, and to go long for another wave. Here is how the market moves most of the times. The market moves in trends. Higher time frame goes up, whichever you consider as your higher time frame. Then you have a lower time frame that makes these trends within that higher time frame. And as I say to all of my students, at some point in time, when the higher time frame retrace back and it's ready to continue, depends on which lower time frame you are looking at. Always the last move, as trend traders, we get it as a losing trade. Always, always, always. But imagine you are riding this trend and you get 4 entries, 4 winners, and all of them 2-1 or 3-1, and you get the last one as a losing trade and you are -1. It's totally fine, nothing wrong with that. Okay, but consistency and 100% winning trades in trading, they don't work. Nasdaq formed a bearish engulfing at support. See how the buyers tried to push the price up and sellers came with a bearish engulfing here. I'm not saying it's the best opportunity we can see in the market. What I'm saying is that sellers are looking more interested pushing the price lower than buyers pushing the price to the upside. If that makes sense. And here it comes. Okay. So far, the situation looks bearish on Nasdaq. This is the German 40, the European indices, and it's much weaker than Nasdaq. This one was a classic great sell opportunity with a 3.5 to 1, actually not 3.65 but 3.5 to 1, and it was on the USD JPY London session, guys. Very nice opportunity. Look at this, the market made its first lower low. We spotted this bearish Marabozu, these candlesticks here. For those who don't know, we call them bearish Marubozu candlesticks. They have an unusually long body and they show imbalance. Always they show imbalance. That means the sellers were much more aggressive than buyers and the price went down. It got out of balance. So usually 90% of the time the price retraces back to the area of value, which above this support we had the balance, and the price from this imbalance, from this balance area, went down to this imbalance, created another balance here, it had another balance there, and then it wanted to move where? Of course, back to an area where it was feeling balanced. Retracement from this high down to that low. Look at how the 61.8 was very close to the support. We didn't get any price action here, any candle to sell, but right there the price touched the 61.8. Look at this inside candle. So we sold below the entry on the candlestick was to sell below here, entry with stop loss anywhere above here, anywhere there, and take profits right there. So we risk that much to make all that much. Okay, that's what I'm saying. Learn how to trade candlesticks. You will seek consistency, and then you can start adding volume, you can start adding market profile. Don't try to do everything at once. You will never ever find a process you can follow, you can trust, and become a consistent trader. Okay. Buyers, oh, look at this. Buyers stepped in, formed that bullish engulfing candlestick. What do you think, guys, about this session? What do you think? Let's check the gold for a moment. Guys, what did I told you? Bearish engulfing of a bearish trend. Gradually, slowly, maybe the market will decline further. For sales, this is the first key support on this 5-minute chart. Euro USD, if you draw Fibonacci from this low to that high, the price retraced at 38.2%. Healthy retracement is considered anywhere between 50 and 61.8, so about 65%, 60 to 65% of the overall move. Okay, so I see something interesting on Nasdaq on the minute chart. Look at this one. The price tried to come up all the way here. Oh, 1 sec. Tried to come up all the way here. Sellers defended this area. See how the market makes lower lows here, guys. See how the market makes lower lows. Let's have a look at the calendar Forex Factory to see what news we're going to have this week. So in the US, it was daylight savings last night, huh? I didn't know that. Today, Monday and Tuesday, no major events. Perfect. At least we can trade a little bit the markets under normal conditions. Then from Wednesday onwards, the markets will pick up. Positive CPA in the US. Will be interesting. We're going to discuss about this on Wednesday. We're going to be here again on Wednesday doing live. So I'm not going to go through this stuff now on Wednesday, guys. In 25 minutes from now, the cash market will open. And there we will see how the moves will progress with Nasdaq and the rest. On Euro US dollar, the candles are maybe they will form. If we see a black candlestick closing below this bullish engulfing slope, we will have that 3 reversal pattern, bearish, bullish, bearish, and it's going to end up pushing the price lower. We have a nice pickup on Nasdaq from the support. So everything was looking bearish here, but the market really didn't want to move further. For me now, the price is within a consolidation. Everything is in balance here. There is no clear bias. After this rejection here, which it was a nice move following this move to the upside, retracement, picked up some good trades here, target the previous high. Now the move is over. We want to see what's next from this point. I was expecting to see some push to the downside. The market didn't follow through, at least prior to the cash market open. So now we have to change our biases and go with the flow. At this resistance, I'm not interested to buy, sorry, I said sell. I'm not interested to buy here. I will be only interested to sell, to be honest, not to buy. See guys, the market is consolidating. Honestly, no clear biases, whether buyers or sellers are in control. Only at a bearish breakout or a bullish breakout we will have a better understanding. of where the flow is now. So let's wait. Let's wait. Patience. Patience, patience, patience. As the price is right there now, I really want to see a break to the downside. What else to say? I mean, if the price bounces the support and goes up again, I mean, okay. Okay. Now we want to see the breakout, really. Now we want to see. 1 minute left for the candle closure, and if we see a breakout here, oh, no, it's going up. German 40, whoa, 2% down. Okay. I want to see a close below this low. Close. I want to see a close here. A move like this. And not just a typical move, but we want to see a close. Okay, here it comes, it's party time. It's party time, and it's gonna be a good one. Okay, so far good. So here is the deal. A break below here will set us into business. There is an inside reversal here. An inverse hammer as an inside candlestick, this one here, is considered as bullish reversal when it founded at support. Actually, in my course, I have an example, a trading example like this. It's a textbook example. I'm not saying we just trade it the way it is, but I'm saying the implications are more bullish than bearish, okay, on this one. Look at it. Guys, learn how to trade candlesticks. You will be amazed how different your trading will be. And I know you're gonna say about ICT and all this stuff. I get it. If you find consistency with this stuff, just do it. If you are doing, keep doing it. But if you haven't found consistency yet, just be open to understand how the market mechanics work. I'm sure everyone wants to become consistent, wants to become profitable. Okay, guys, I will leave it up to here. Let's go for a final overview for those that are going to be here trading the New York session, the cash out market open. So here is on the 15-minute chart, the price find it hard to continue this higher high formation, put that equal top. Now it's a double top because we have a break of this low. No close below this low yet, but it's considered as underselling pressure. Now, if we see a further move to the downside and a close below this low, for sure we're gonna have high probabilities to push further down. If not, and the price closes above all these highs, not false breakout but a close above, then we will target the end of this or the beginning of this gap. I wish you happy trading. Thanks for tuning in, and I will see you on Wednesday in the next live. Take care, everyone.